Hello everyone, welcome to this week's weekly market view for Monday the 12th of June to Friday the 16th of June 2023. My name is Vishal. Let's get started. All right, let's start with the monthly chart of the Nifty and let's quickly see what the Nifty is doing on the monthly chart. So on the monthly chart, we are trying to move towards the all-time high, but as the price come closer to the all-time high, we are seeing a little bit of selling pressure coming in. The demand zone on the monthly is still intact, so nothing much has changed on the monthly chart. And prices are bouncing and trying to make the all-time high on the monthly chart. If you go look at the weekly chart, so we have created now a potential rally, base rally, very closer to the all-time high. Now we are also creating what is called as a base. Now, what could happen in the coming days is that we could see a rally base and a rally pattern, which could break the all-time highs. But if the market does fail to break the all-time highs, this might also turn to the downside. If the price indeed corrects and turns to the downside from the current market levels, then we will have this demand zone as an interim level where the price can stop. And we have one more level of demand, which is here, which is rather closest to the current market price. So it could happen that market could see a correction of close to around 200, 300 points on the Nifty, and then eventually take off to the upside. That's on the weekly chart. If you look at the daily chart, we are sitting a little bit and there have been two bearish candles over here. So right now we have just filled the gap here, and maybe now we are trying to move up. So this is that gap level, and markets are just holding on to this 18,551, 475 odd level. If we go on to the smaller time frame charts, maybe we will be able to locate some levels. If you look at the options IV indicator, the IV has slightly increased to zone 2. It was for quite a few days in zone 1. And now that tells you that the premiums, which were very deflated, have now, become a little less deflated, right? So this volatility increasing is indicating that premiums are also increasing. Now we do have some news events this week. We have the inflation data. We also have the Fed rates. So markets are going to be a little volatile. Premiums are going to be spiking up. Need to be a little cautious, especially for the people who are trading in the FNO segment. If we now go on to, let's say, the 240-minute chart, the 240-minute level of supply is still holding. So as long as this level is holding, the focus will be that any rise that comes into this market, we could possibly think about shorting. And once the market does break this level, then probably we'll have to start seeing for new levels to go long. On the 75-minute chart, there are these two levels, 18,692 to 18,737. This was created on the 8th of June. This was last week, and the demand zone is right here. So that drop base rally 18,182 to 18,062. So it seems like markets might tend to be range bound in the few days to come, unless and until 18,737 is violated to the upside, or then 18,062 breaks to the downside. Till then, I think we are just going to be seeing the market being range bound between these two levels. Let's move on to the Bank Nifty now. And on the Bank Nifty, there is one level that I want to discuss with you guys. Let's start with the monthly chart first on the Bank Nifty. And if you look at the Bank Nifty monthly chart, market is making an all-time high. So if you go on to the weekly chart now, this is that level of demand. Price is far away, and now you can see that seems like at this moment market is looking a little bit tired, at least from the candlestick formation. Maybe it wants to take a little bit of a breather or a pause before it wants to either move up or then consolidate and move slightly down. If you look at the daily chart, Yeah, again, if you look at the volatility is in zone 2, slight increase or slight spike today in the premiums, but nothing much. Markets are still holding on to that 44,000 handle, and they're trying to keep themselves up. There is a small gap level over here, which is holding, and as long as this level is holding, markets may not see bearish momentum. But in case if this level does break, then to the downside, then we might be going into a little bit of a bearish territory where we will try to fill this gap as well. So these are the two key levels on the daily chart. There is no supply on the daily. And then when we go to the 10 minutes chart, these are the key levels of demand. So in case of price does pull back to these levels, now this level is already tested, but when I check my futures chart, the futures level is still fresh. So can the price come here and give us a bounce? Surely yes, but I think now since the price has already pierced deep inside, the lower level will be a far more better opportunity, which is 43,587 to 43,511. And this is on a 10-minute chart. All right, let's move on to the next market, which is Nifty. Just making sure I'm looking at the correct expiry. And if you look at Nifty on the monthly chart, again, behaving very similar to the Nifty and the Bank Nifty, coming close to the all-time high, not being able to close above this high here. So markets are facing a little bit of a challenge here. If we go on to the daily chart, see on the daily, what do we see here? So on the daily, we have this rally-based drop supply. Markets came here, tried to break this high, but I was unable to sustain. And right now, markets are just simply consolidating. So we don't know. I mean, in case if the markets want to remain sideways to bearish, they are going to be consolidating in this range, unless and until 19,641 breaks to the upside or 19,130 breaks to the downside. So expect to see a range-bound move on the Nifty as well. Let's move on to the next market, which is the USD INR. And let's see what the USD INR is telling us. Usually, when the USD INR is moving up, the Nifty is expected to move down and vice versa. So let's see now what the USD INR is doing. So since the past couple of months, the USD INR is basically doing nothing. It's just range bound. Okay, this is still your monthly level of demand. It's creating more like a flag formation over here. Right? So it might just give you a little bit of a pullback. On the weekly chart also, we are getting into this formation. And usually when the markets try and contract within this formation, you should be able to see a breakout on either of the sides. And that breakout is a pretty strong one. So let us see now, based on what the price action is telling us, whether the market does want to push or give a retracement to this level of demand, bounce, and then start moving up, right? So this is where the USD INR is facing a very strong resistance, which means in the long run, the 83 whole number will be a number to watch out for. And any break above the 83 number will probably get in more buying on the USD INR. This week, we'll talk a little bit about the IndiaVIX. Right? So let's plot this on the chart here. Let's look at some important levels of the IndiaVIX. Okay, so currently the IndiaVIX is trading at 11.29 on the monthly chart, and you can see here there were times where the VIX had blown out of proportion, and this was during the pandemic as such. But then since then the VIX has just more or less cooled down, and it's more or less sideways as of now, right? So right now, the moment the India VIX reaches a level of, let's say, close to, or let's say below 10, it has the tendency to start moving to the upside. And generally, when the VIX starts moving to the upside, it has an inverse correlation with the Nifty and the indices, right? So now the VIX is currently at lower levels. Now, because of the news coming into this week, the Fed news, etc., there is a possibility that we might see a little bit of a volatility increase. Okay, so just something to note. If you look at the 75-minute levels on the VIX, we have this one level over here. And in the coming days, let us see if the prices do try to hit this 14.11 to 14.57 level. Now, it becomes a little difficult to read the VIX because of the, these VIX that you see on the chart here. But these are nothing but the opening candle. And because this is the opening candle, maybe, while you're doing your analysis, you could possibly just ignore this and just take into consideration if price has, come into this level. So for example, now in this case, we had this level of demand and we had these several wicks, right? So we ignored all this, but and you see here now the price is still holding on to this level, right? So if you ignore the wicks, 11.05 to 10.78 is still a level, and to the upside 14.11 to 14.57. So in the coming week, we would expect the India VIX also to be range bound, which means we also expect our Nifty, Bank Nifty, and the Sensex also to be range bound. All right. So hope you enjoyed the analysis. This time around, we introduced a new market, the India VIX, and how to go about reading the India VIX and how the India VIX can actually tell you where the market is heading. I hope you enjoyed the analysis. If you do like our videos, please do subscribe to Sher Khan Education channel on YouTube, and definitely give your valuable comments for this video as well. Take care, everyone. Have a lovely trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.